Financial markets attempted a breakout last week but failed. The Dow jumped to as high as 13,588.73 but reversed ahead of the 13,661.87 resistance and dropped sharply to close the week at 13,343.51. The dollar index recovered ahead of the 78.60 support to close at 79.62. The overall outlook in the currency markets is quite mixed. Euro-US dollar failed to break out the 1.3171 resistance and retreated. British pound-US dollar was limited at 1.6177, well below the recent high of 1.6309. However, US dollar-Swiss franc did breach the 0.9238 support to resume the recent decline. Australian dollar-US dollar's rebound to 1.0410 was stronger than expected, but again there was no follow-through buying. Meanwhile, the Canadian dollar was the weakest currency last week on dovish comments from officials and weak inflation data. Euro-yen breached the 103.86 resistance to resume the recent rally, but the momentum isn't too convincing. Meanwhile, British pound-yen on the other hand, failed the 128.82 resistance. So overall, we'd expect commodity currencies, in particular the Canadian dollar, to stay weak this week, considering the risk of deeper pullbacks in stocks and commodities. We also expect the dollar to attempt to extend its rebound against European majors. The power should be relatively weak and strength shouldn't be sustainable. And the outlook in the euro and Swiss should remain bullish for the moment, and thus, even though some decline could be seen this week, we'd expect these to pick up some momentum towards the end of the week. Comparing the European majors, sterling will likely lag behind, as it did against the dollar and yen last week. So we look for opportunities to get Euro-Canadian dollar and Euro-Aussie dollar long in near term. While failing to increase confidence over the Eurozone outlook, the EU summit held last week raised confusion over whether the banking union would begin operations early next year. EU President Herman Van Rompuy stated that the regulatory system would probably be effectively operational as soon as 2013. However, German Chancellor Angela Merkel's tone appeared less certain. She said that, "There are complicated questions to clarify and we'll see in December if we complete it or not. For now, the political will is there." Merkel added that the gold standard is banking supervision that's worthy of the name, because we want to create something that's better than what we currently have. Moreover, there were few updates from Spain. Prime Minister Rajoy said that, "There hasn't been any pressure, there have only been opinions on the bailout." Rajoy said that, "Opinions are one thing and decisions are another, and no decisions have been made." In Greece, it's expected the next tranche would be granted as the Troika appeared to be satisfied with the country's fiscal consolidation progress. In the EU post-meeting statement, the leaders welcomed the determination of the Greek government to deliver on its commitments, and we commend the remarkable efforts by the Greek people, and good progress has been made to bring the adjustment program back on track. In the UK, the October Bank of England minutes indicated that the 9 members voted unanimously to leave the bank rate unchanged at 0.5% and the asset purchase programme at £375 billion at the meeting. The minutes also unveiled that policymakers were divided regarding whether asset purchases should be extended after its completion by the MPC meeting in November. Members were also split on the effectiveness of the programme on the country's economy. Therefore, the month's minutes omitted the language that policymakers felt that additional stimulus was more likely than not to be needed. The Canadian dollar was the weakest currency last week. Bank of Canada Governor Carney warned that synchronous slowdown underway in the global economy could spill over into Canada. And the bank's revised forecast next week will take into account the impact of the uncertainty. The central bank had been somewhat hawkish as it mentioned in its last statement that Some modest withdrawal of the present considerable monetary policy stimulus may become appropriate. However, Carney's comments sounded like the central bank will retreat itself from this tightening bias and turn neutral instead. Finance Minister Jim Flaherty said that while Canada is still on track, the economists have told them to anticipate moderate growth, and the economic forecasts may have to be revised downwards. Deeper sell-off was seen after lower-than-expected core inflation reading. The Reserve Bank of Australia's minutes for the October meeting unveiled reasons for the surprising rate cut of 25 base points. The decline in bulk commodity prices, slowdown in the job market, persistent strength in the Australian dollar and weakening domestic growth outlook were key factors leading to the rate cut earlier in the month. Overall, the Reserve Bank saw easing in the growth outlook and the minutes were dovish. However, the chance of further rate cuts later this year cannot be ruled out. China's latest set of economic data showed some positive signs in the growth outlook. Third quarter 2012 GDP expanded 7.4% from the same period last year and 2.2% from the previous quarter. Premier Wen Jiabao indicated that growth has started to stabilize amid positive changes in the third quarter, signaling a bottom might have been seen in the last quarter. Other data such as retail sales, industrial production and fixed asset investments also showed acceleration in growth in September. In our opinion, the improvement in Chinese economic data should delay the next round of monetary easing as policymakers will prefer to take a wait-and-see mode and gauge the impacts of previous reverse repos operations. A focus of the week ahead is whether the Canadian dollar's sell-off would accelerate further after the Bank of Canada's rate decision and monetary policy report. There are speculations that the Reserve Bank of New Zealand will turn back into a loosening bias and its post-meeting statement will be read carefully. The Federal Open Market Committee will also meet, but this could be a non-event. Eyes will also remain on the development in Spain and Greece. Some heavyweight economic data will also be featured in the week, including third quarter GDP from the UK and the United States.